One of the biggest questions that I get in terms of buying real estate here in St. Augustine is how much money is going to come out of my pocket in order to buy a home here? Well, if you're looking for more information like that, then this is the video for you, and we're about to get after it right now. What's up, everybody? This is Thomas with Keller Williams here in St. Augustine, Florida. And if you're looking for everything you need to know about eating, working, sleeping, and how much it costs to buy a home here in St. Augustine, then this is the video for you. So tap that subscribe button below, like the video, and if you have any additional questions, go ahead and leave a comment below and I'll get right back to you. If you need any further assistance, please reach out to me directly. We got tons of people reaching out to us all the time, and we love to be able to help out, especially when they're relocating here to our beautiful town. Also, stay tuned towards the end of the video. I'm going to have a sum of the total costs and also your no money down options for buying a home. So when you're deciding to buy a home, the first thing you got to figure out is how much of a home you're looking to buy. That's obviously going to tell you how much money is going to come out of your pocket. So for our practice here, we're going to use the median sale price here in St. Augustine, Florida, which is $381,000, and we're going to base our math off of that. Just because if I was doing everything else, we'd be here all day long. So the first question to ask yourself is, how am I going to pay for this property? Am I going to be utilizing cash, or am I going to be utilizing financing? So if you're utilizing cash, you're probably not clicking on this video because you know how much you're going to spend. It's going to be $381,000. That's your total out of pocket if you're using cash. The one thing about cash, they always say that cash is king, but here in our market today, we're seeing conventional offers be just as competitive than a cash offer right now. Maybe before, back in a softer seller's market than we were in today, you might be able to have a little bit more leverage with cash because you can close quicker and there's not as many contingencies associated with it. But in today's world, actually the time is needed for a lot of the sellers because they need to figure out where they're going next. Because right now in our market, it's pretty easy to sell a house, but to find your next home is actually the difficult part. Whether you're using cash or you're utilizing financing, the main thing to know is that you're going to need to be able to show that to any seller that you're looking to buy a home. So that's going to be your proof of funds letter. So whether if you're paying cash, it's going to be a statement from your bank saying he has X amount of dollars in their bank account. If it's going to be financing, then it's going to be a letter from the bank saying that this person is going to qualify for up to a $381,000 mortgage by X and X bank. Regardless if you are utilizing cash or financing, you are going to be wiring that money. This isn't the time where you can bring a suitcase full of money to closing. That just doesn't happen anymore. I did actually have one instance where I was working up in Brooklyn and I had a potential buyer offer me $20,000 on the side of the transaction, which is completely illegal just for me to have. That deal didn't work out, but yeah, so everything needs to be above board. It has to go on disclosures. There can't be any money under the mattress or a briefcase full of money somewhere that's going to be given to the seller at a certain point. So the money is going to be wired. The first thing you'd want to do when you're buying a house is going to get pre-approved with a lender. Now that's something that's outside of me. That's someone that you could find at your local bank, your local credit union. There's also a couple of internet companies that lend as well. And depending on your financial situation, they're going to be able to tell you a couple of different things, such as how much money you're going to put down, what your monthly payment is estimated to look like, and what your possible interest rate could be. Now, they're not going to be able to lock that down until you're about to close on the home, but that could be variable. So if you're utilizing financing, the first thing that you need to do is get pre-approved for a mortgage. Now, why is that an important first step? Why can't you just find the house and then get pre-approved? Well, maybe in a softer market, we might have been able to do that. But right now, our competitive market demands that you get pre-approved first. And that means you got to have all your ducks in a row, because if you don't make a decision today, the house could be gone tomorrow. If you're going to sleep on it, you're not going to sleep in it in today's market. Now, when a bank looks at your information, they're going to be evaluating three main things. First thing is going to be how much money are you going to be putting down? Second thing is going to be an average of 3 different credit scores from the major credit reporters. And the third thing is going to be your debt to income ratio. So that could be 43% on average, but it could go higher, could go lower, just depends on what lender you're utilizing. There are 4 types of financing that I want to go over today. The first one's going to be conventional, the second is going to be FHA, the third one's going to be VA, and the fourth one's going to be USDA. If you are looking to utilize a conventional loan, that's typically between 5% and 20% of the purchase price. So based on a median sale of $381,000, your 20% down is going to be $76,200. Your 10% down is going to be $38,100, and your 5% down is going to be $19,050. Now, most people are going to want to put 20% down so they can avoid private mortgage insurance. If you put any amount below 20%, you're probably going to have to pay for private mortgage insurance throughout until you reach that 20% point. Now, if you decided to utilize a FHA loan, now that is going to be a 3.5% down payment. They have a little bit looser restrictions on FHA in terms of your credit score and debt to income ratio. So that makes it a lot beneficial to a lot of people because they can utilize the low down payment and also have not the best in the world credit score. So it's actually a great program. If you're buying a home at $381,000 with a 3.5% down payment, your out of pocket for your down payment is going to be $13,335. This is aside from your closing costs, but this is going to be your total down payment to get in a $381,000 house. A couple great things about the FHA loan you may not know is that you can use an FHA loan to buy a primary residence up to 4 units. And you have to live in it a year at least, but you can buy a multifamily building with 3.5% down up to 4 units if you're looking to utilize an FHA loan, which makes that a great opportunity to build some wealth for a lot of people. The one thing with FHA that is kind of a negative is that they have more housing restrictions than they would a conventional loan. And what that means is as you're going through the loan, they're going to require certain things that a conventional loan may not. So for example, a FHA may require a wood destroying organism report on the property before they allow it to be financed. Now, some require it, some do not. It just depends on the certain situation, but a conventional loan would actually not even care about that. You can still get the inspection done, but they're not worried about that like an FHA loan would be. A VA loan is going to be a Veterans Affairs loan, and that's going to be for, of course, our veterans here in the United States. That's going to be a 0% down loan, which you can put more if you'd like, but you can put 0% down, which is it's literally no money. I don't have to do the math for you there. And you would only be required then to pay closing costs. Now, with the VA, there are some benefits to that. Of course, you have the 0% down payment. They do also have a little bit looser credit and income limits as well in terms of qualifying. The one negative thing about a VA loan is going to be also very similar to the FHA loan, is that VA is going to have a little bit of different standards when it comes down to the housing quality. So for example, FHA, if you don't have a clean wood destroying organism report, if there's this much mold damage on the exterior door, you need to have that replaced before moving forward. There is also a VA funding fee, which is paid at closing too. And the fourth thing I want to talk about is going to be USDA loans and how much money is going to come out of your pocket there. This is also going to be one of your no money down options. So you can do 100% financing. Now, the one negative thing with this type of loan is that you can only buy a single family house, and it's geographically restricted because it is actually a rural housing loan. So if they don't consider it, or if it's not on the USDA map, then it's not going to be able to be considered for USDA financing. Guys, if you are getting some value from this video, if you're learning a little bit about the math that comes down to real estate when buying a home here in the area, please do me that solid. Tap the subscribe button below, like the video. If you have any questions about financing, how much money you need to put down, leave me a comment. I'll get right back to you. If you're looking for more information about the costs of living here in St. Augustine, I also have another video I'll plug up here just so you can take a quick look at that. Now, we talked a good bit about financing and your down payment options among the different loan programs, and you heard me mention a couple of times your closing costs. So what are closing costs? It's very simple. It's exactly what it sounds. It's the costs associated with closing on your home. Now that could be we typically bundle this and call it closing costs, but that could be your appraisal fee, that's going to be your title insurance, that's going to be your prepaid costs for taxes, insurance. It's going to be a variety of different things that we lump into your closing costs. So if you need a full list of what that's going to be and what an estimated cost breakdown would look like for you, just reach out to me and I can get that based off of whatever number you're looking for. So how much are closing costs going to be on a $381,000 house? Well, this is not a perfect math, it's not a perfect science, but it's going to be about 3% to 4% of your purchase price. So just for easy math, we're going to use 3.5% based off a $381,000 median sale here in St. Augustine. So that's actually going to be really easy for us to do because we already did the math for FHA. That's $13,335 that would be going towards your closing costs. Give or take, let's say $1,000 to be conservative. Now, if you're utilizing a conventional mortgage with 20% down, your down payment is going to be $76,200 plus your closing costs, which is going to be 3.5% of $13,335 for a total of $89,535, which is going to encompass your down payment and your closing costs. Now, of course, you can take that 20% down, you can half it if you're looking to do 10%, or you can half it again if you're looking to do 5%. Just depends what you're pre-approved for with your lender. Now, if you're utilizing an FHA loan, that's going to be 3.5% down, which is $13,335. And for easy math, we'll just double that, which is going to come out to $26,670 as your total out-of-pocket expenses. Now, this could change because, of course, the closing cost is an estimate and the purchase price is just this is just an example. So that could change depending on how much or how little you're spending. Now, if you're utilizing one of the no money down loans, either USDA or VA, then you can obviously put 0% down, so your down payment is $0, and then your closing costs, which is that $13,335, which will then lead you to your out-of-pocket expenses of $13,335, give or take $1,000 for that fluctuation in closing costs. One thing to note about the differences in down payment, depending if you go higher or lower, that's going to affect also your monthly payment. So if you're putting more money down, your monthly payment is going to be lower. If you're putting less money down, your monthly payment is going to be a little bit higher. In this scenario here, it's going to be the difference of about $300 a month. So your 20% down is going to be roughly $1,700, and your 0% down is going to be roughly $2,000. Guys, and that is it. That wraps up our video of how much money it's going to take to buy a home here in St. Augustine. If you're looking for more information about the cost of living here in the area, I've got a great video for you, so go ahead and check that out as well. If you found some value in the content here, please do me that solid. Tap the subscribe button, like the video. If you have any additional questions, just comment below and I'll get right back to you. Please reach out if you have any additional questions. I'm here for you. We have people reaching out all the time, whether that's a call, a text, or email. I'm here for you, so please reach out.